To keep yourself updated, subscribe to Indigo Learn and click the bell icon and download our app OneFin to start learning on the go.
Welcome students, this is Sriram from Indigo Learn. This is for paper 3 CA Inter Cost and Management Accounting, chapter 1 to 4 revision and doubt clearance session. So whoever has sent their doubts, those will be addressed. First we will finish off the doubts and then we'll come to revision of chapters 1 to 4. It will be a very quick revision. Okay, please don't think that it will be a very extended revision. It will be a very quick revision. And any doubts that you have, please, if any of you have shared them earlier, yesterday before 5 p.m., we will address those. If you have not shared them, you can feel free to ask, but the faculty will respond if he has time. That is one. Second, if the doubt does not involve an elaborate explanation. Okay, so because the expectation in this session is that you guys come prepared. You don't ask doubts on the trot. Okay, so that is the expectation. So we'll wait for just a minute or so. We're expecting a few more people to join and then we'll start off. Okay, anyone has any doubts, please feel free to post it in the chat and we'll respond. Okay, and I also request everybody to stay muted initially. I think I'll hand over the session to the faculty, Pranay Mehta, CA Pranay Mehta. I think he'll take it over from here. Pranay, over to you. You can start off. Specifically, first address those doubts, and then, as we discussed, a quick revision. And if the revision gets over and we don't have enough questions, we'll wind it up in shortly. There is no restriction that we have to go on for a full time. As long as we are able to solve the doubts quickly, we will solve them. If anybody asks doubts that have not been provided to us yesterday, well in advance, and they are very lengthy, and you have to explain the entire concept, then we ask them to go back, check the videos, and then send us the doubts in the next session. So we'll conduct one more session sometime in January. We'll have sessions like this, covering all the chapters, where we'll do quick revisions of four chapters each. Totally, there are about 15 chapters, right, in CA Inter Paper 3 CMA. So we'll conduct multiple sessions over the course of next 2 months. So in those sessions also we'll be handling doubts of all chapters as long as the doubts have been sent in advance. Whereas the revision will be done for four chapters or 3 chapters together. Okay, so Pranay, over to you. Feel free to end the session if there are no sufficient doubts, or people once you're done with your revision and we don't have anything else to add. Okay.
Sure, Sriram. Thank you.
Thanks.
Hope all of you are doing amazingly well. So few of the students, they have shared their doubts earlier. So let's start this session by first addressing those doubts, and then once we are done with those doubts, then we can have a very quick revision and go forward. So the first doubt that we had was on the topic of employee cost, and this was in relation to a particular illustration given in the study material. So let me just share that screen and quickly pull out the question so that we can go through that and see how we can address the doubt. Correct. So basically, illustration 5. So let's go through the question first, and then let's understand what the doubt is and how we are going to address that. So this question is based on calculation of the wage rate and treatment of overtime. So in a factory, the basic wage rate is rupees 100 per hour, and the overtime rates are as follows. So the basic wage rate is rupees 100 per hour, and the overtime rates are as follows. So before and after the normal working hours, we are going to pay at 175% of the basic wage rate. Sundays and holidays is going to be at 225% of the basic wage rate. Then they are saying during the previous year, the following hours were worked. So normal time, that is within the normal hours, 1 lakh hours. Overtime before and after the normal working hours, 20,000 hours. So for these 20,000 hours, we will have to pay at 175%. Then they are saying overtime on Sundays and holidays, 5,000 hours, which has to be paid at 225% of the basic wage rate. So friends, see, when we say 175% or 225% of the basic wage rate, what we need to understand is that it is made up of 2 components. One is the normal wages, which is your 100% of the basic wage rate, that is 100 per hour. and then the premium that we are going to give for the overtime. So when we say 175%, it's basically 100% towards the normal wages and 75% towards the premium. And when we say 225, it is 100% towards the normal wages and 125% towards the overtime premium. All right. So the total hours are 1,25,000 hours. Next, the following hours have been worked on job Z. So while carrying out this particular job, 1,000 hours were worked towards the normal working. Overtime done before and after the working hours was 100. Sundays and holidays was 25. The total is 1,125 hours. Now the requirement in the question is you are required to calculate the labor cost chargeable to job Z and overhead in each of the following instances. So they are asking us, look, there is a job that we have carried out and this job has taken certain number of hours. What is the cost that we are going to associate or allocate or calculate for this particular job? So they have given us three separate instances. Let's understand each one of them carefully. So case A, where overtime is worked regularly throughout the year as a policy due to worker shortage. Now see, the treatment of overtime in a large way depends upon, what are the reasons for this overtime. If we say, sir, the overtime is a regular feature, we are having to do overtime continuously throughout the year because workers are not available, then in that case, friends, this overtime, I cannot call it to be abnormal. This overtime has to be considered a normal part of our operations because we are having to do that normally. So the moment I say something is normal, it means it has to be included in the cost of the activity or the cost of the job or the cost of the product that we are undertaking or producing. So the moment you say it is normally happening, then it will not be treated as abnormal. What is the difference between normal and abnormal? See, something that is normal is always going to go to the cost, but something that is abnormal is going to get debited to the costing period. So in the first case, what they are saying is it is a normal policy. We are working regularly throughout the year due to the worker shortage. So we will have to see how we should deal with that. Second, where the overtime is worked irregularly to meet the requirements of production. So they are saying this overtime is not a normal feature, but irregularly, occasionally, in certain exceptional circumstances, we are having to carry out this overtime working. So friends, in that case, the cost is going to be treated as abnormal. It is going to go to the costing P&L. The overtime, we are not going to charge it to the particular product or job. Then, where overtime is worked at the request of the customer. So when we are working at the request of the customer is saying, look, you need to do this. You please, I don't mind paying extra. You work overtime, and for this overtime, I'm ready to pay. So when we are doing this overtime at the request of the customer to expedite the job, then this overtime is going to go directly to the cost of the product or cost of the activity or the cost of the job that we are undertaking. All right. So let's see how the treatment is going to be in each of the three cases. So friends, in the first case, when we are saying that the overtime is going to be treated as a normal part of the business and is going to be treated as a normal cost. So in that case, what we are going to do is we are going to calculate an effective wage rate. See, what is happening is we are working during the normal time, we are working before and after, and we are also working on Sundays and holidays. So what we will do is we will calculate the total wage cost for the entire period divided by the total number of hours available, arrive at a revised rate. Now, this revised rate is actually the uniform rate that we should use for all the activities carried out. Why are we calculating this revised rate? We are calculating this revised rate because abnormal time I mean, because overtime is a normal feature and it is not abnormal. So practically what we are going to do is we are going to calculate what is the total wages that we are paying. So annual wages during the previous year from normal time. So 1 lakh hours into 100. Wages for overtime and after working hours. 20,000 hours at 175%, which is basically 175 rupees. 35 lakhs. Wages for overtime and on Sundays and holidays. So 5,000 hours into 225. So totally 1 crore plus 35 lakhs plus 11 lakhs 25, 1 crore 46 lakhs 25,000 is the total cost. And what we are calculating here is something called as the average inflated wage rate, which is a revised or the incremental cost. So this is more like a revised wage rate, or you can also call it as an effective wage rate. All right. So the effective wage rate or the average inflated wage rate in this case is going to be 1 crore 46 lakhs 25,000 divided by total 1 lakh 25,000 hours. So that comes to rupees 117. Now this cost of rupees 117 per hour is what we are going to use while calculating the cost of the job Z for the total number of hours worked, irrespective of whether it is during the normal time or during before and after or on Sundays and holidays, because this overtime is a regular feature. So in case A, what we are going to do is we are going to say, look, basically we have used 1,000 plus 100 overtime before and after and 25 Sundays and holidays. So totally we are taking 1,125 hours. So let's take this 1,125 hours and multiply it with 117. So that is going to be the treatment that we are going to give for the first case. Now, one of the students, the doubt they had was basically, sir, why are we using this 117? Why should we not do 1,000 hours into 100, then overtime hours 100 into 175, and Sundays and holidays 25 into 225? Why should we not do that and do this 117? We are having to do this calculation of average inflated wage rate because overtime is 0.1, not abnormal in this case. 0.2, it is not specifically for the job. And 0.3, more importantly, they are saying it is normal. The moment they say it is normal, we calculate a revised inflated wage rate, and that is what we are going to use. Now, in the second case, when they say overtime is worked irregularly to meet productions, that means the overtime is not normal, it is abnormal. Whatever overtime premium, please listen to this carefully. We are saying whatever overtime premium we are paying over and above the basic wage rate, that we are going to treat it as factory overhead. It is not going to come to this job directly. All right. So what employee cost we will charge directly to this job will be simply 1,125 hours at rupees 100 per hour. Now, you may get a doubt, sir, but rupees 100 per hour is the cost only for normal working hours. For overtime before and after, it is 175. And for Sundays and holidays, it is 225. Why are you taking the entire 1,125 hours? Because please recollect, what did we say? In that 175% and the 225%, 100 rupees is the basic normal. See, had we done this job during the normal working hours of the business, we would have paid 100. All right. Would we charge that 100 to the cost of the job? Definitely. So that 100 basic will have to be charged to the cost of the job in all circumstances, whether it is normal overtime, abnormal overtime, or at the request. Over and above that premium, whatever we are paying, that premium, we are not going to take it here. We are going to treat it as abnormal, take it to the overheads. In certain circumstances, we may also take it to the costing P&L directly. So factory overhead in this case will be 100 hours into 175 minus 100. 175 is the effective overtime that we are giving. 100 is the basic. So 75 translates to be your premium. And likewise for the 25 hours on Saturdays and Sundays, 225 minus 100. So that is where we get the factory overhead of 10,625. Then the third case is where they are saying it is at the request of the customer. So when it is at the request of the customer, entire cost is going to be absorbed by the particular job only. So one way of doing it is you can say 1,125 into 100. This is the normal basic wage rate plus overtime premium for 100 hours, 75 at 75, for 25 hours at 125. We will write and we will add it up. Alternatively, what you could have done is you could have said 1,000 hours at 100, 100 hours at 175, and 25 hours at 225. So that also could have been your method of calculation. So I hope this doubt has been clarified as to why we are taking that 117. So the basic doubt was why that inflated revised calculation, why that average inflated wage rate. The answer is because it is given as normal during the entire year.
Yeah, my name is Nisam and I raised this doubt.
Yeah, Nisam.
Yeah. Sir, can I know what is the wrong in doing that 1,000 hours into 100 plus 100 hours into 175, then 25 into 225? What is the wrong in doing that for the first case A?
See, what is wrong in that case when I am saying that the overtime is a regular feature? That means even carrying out my regular activities, not only this specific job, but for carrying out other regular activities also, I'm having to do overtime. So it is not that because of this particular job Z, I am having to do overtime. When something is not specifically attributable, I cannot take it directly to the job. So here, what I'm saying is normally I would have done some activity. That normal activity I'm having to pay at 100 also, and I'm having to pay at 175 and 225 also. So just because a job is being carried out during overtime, it does not deserve to get more cost associated to that.
Sir, since we are calculating the cost of Z, that is why we cannot consider this overtime as an abnormal cost to job Z, right?
We cannot.
Yeah,
so what I'm saying is, see, in case A, itself has to be considered as normal.
Yeah.
Not only for this job, but for all the activities that are. So in that case, what we are doing, we are calculating the total cost for the entire period. So 1 crore 46 is the total labor cost.
Yeah.
Total 1 crore 46, we have paid for 1,25,000 hours. So we are saying effective rate for 1,25,000 because this overtime is a regular feature.
Yeah.
So let me give you a simple example. See, currently income tax filing season is going on. All right.
Yeah.
So if there are two clients who are giving their tax filing information, one person, I am doing that particular filing in the morning during my regular hours, and for the second client, I am because of shortage of time, I'm doing it towards the end of the day. Do you think I should charge different fee for both the clients who gave the information at same time?
No.
Why? I'm doing the second job in the overtime. So
that is considered normal, no?
So exactly. So that's the same case here.
Yeah.
The request of the customer. It is a general feature.
Okay, sir. I understood.
That is where case A and case C is different. In case C, customer is specifically doing. Now imagine if a customer comes on the last day. And I understand there is only 1 hour left. I'm ready to give you whatever you want.
Yeah.
File my return. So I will charge accordingly.
Yeah. Okay, sir. Okay, sir.
So Nisam, this was the only doubt that you had, or you had a couple of questions?
Yeah, sir, with respect to this question?
Yeah, this question is done. Is there any other question with which you had raised it out?
Yes, sir. I think I have raised
overheads, something.
Yeah, that is overhead costing also. Sir, can I know why for that machine hourly rate? No, like hour rate. Why we are dividing that total overhead with the machine hours? What's the logic of that formula?
See, anyways, we are going to do revision of this chapter. But if I have to, in a nutshell, explain it to you. So probably there's one particular graphical illustration given by the institute, which will help you in understanding it better. Yeah. See, basically, when we talk about overheads, all right,
Yeah,
overheads by their very nature are comprised of indirect material, indirect labor,
indirect expense.
meaning these expenses are not directly related to manufacturing of one single unit. So maybe these are expenses which are in relation to the entire production facility, or maybe it is common for 2 or 3 products. It is not for one single unit. So all these indirect things are going to become your overheads. Are we clear on that?
Yes, yes.
All right. Now what happens is overheads are incurred in relation to a department. So as you are seeing, maybe there are 3 manufacturing departments or production departments and 2 service departments. So the first step that we are going to do is we are going to identify, okay, there are certain indirect expenses. These indirect expenses are not directly attributable to a product, we understand. Can we at least directly attribute it to a particular department or to a particular process? If we can directly attribute it to a particular department, let's allocate. So the first step that we are always going to do
Yeah, yeah.
is to allocate. So whatever is directly attributable, we are going to allocate. So we are going to allocate the overheads to the production departments A, B, C. We are going to also allocate what is directly attributable to service departments 1 and 2.
Yeah, yeah, sir.
Once we have allocated, now the production is happening only in departments A, B, and C because these are the production departments. There is no output that is getting generated from service departments 1 and 2. So, do you think we should recover the service department cost?
No, no, because there is no output being produced in service department. No.
Correct. See, I have 5 departments, department A, B, and C. What I'm going to sell to the customers is going to be the goods produced by department A, B, and C.
Yes, yes, sir.
In my organization, there are 2 other service departments also, which are helping these 3 manufacturing departments in order to carry out the activities. So my question is, should we recover the cost of service department 1, service department 2 from the customer by including it in a part of a cost?
Yeah, yeah. Like,
So how are we going to do that? We can do that only if we apportion. Okay.
yeah, by distributing to the production
Okay, so let me come one step back. So we will allocate whatever is directly attributable, but let's say there are some expenses. Maybe there is factory supervisor who is supervising the entire factory. He is not just looking at department A, B, or C. Then we distribute it on some logical basis. Maybe the time he has spent on each department.
Yeah, yeah.
Apportionment. Now once we have apportioned, so whatever service department cost, just what I was referring to, that has to be reapportioned. That has to go back. That has to go back to the department A, B, and C. So
Yeah,
reapportioning once we do, basically what we are doing is the departments which are not having any output, which can be sold to the customer, that cost, we are in a logical, rational, scientific manner, based on some scientific assumptions, going to transfer to the 3 departments, which are actually carrying out the manufacturing activity. So that process is called the reapportionment.
yeah, yeah, yeah.
Reapportionment, we are going to get the total overheads. All right. Now let's say we are going to get the total overheads for department A as rupees 1 lakh. Let us assume after doing these 3 steps: apportionment, allocation, apportionment, and reapportionment. After we do these 3 steps, the total overheads that we get for department 1, let us assume, is 1 lakh. Now, this 1 lakh is not for a single product.
Yes, yes.
It is for the entire activity carried out, in the department.
Yes, yes.
Now, just extending our example, let us say this department A was manufacturing only one product.
Yeah.
Let's say it was manufacturing only product X. Can I say this entire overhead of department A should be absorbed by product X?
Yes.
All right.
Yes, sir.
If I am producing 10,000 units of X, can I say each unit should absorb 1 lakh divided by 10,000 rupees, 10 per unit?
Yes, yes.
So that is the overhead recovery rate, or what we also call it as overhead absorption rate, that we are calculating by using a reasonable base, this product. Now, just imagine in department A, I am carrying out some activity for product X also,
Yeah,
and carrying out some activity for product Y also.
yeah.
So now can I use the number of units as the base?
No.
So I will have to think of next reasonable scientific basis. Okay,
Okay.
let me find out what is the reasonable base. Okay, what is the that the department is spending on product A? What is the time that the department is spending on product B?
Yeah, yeah.
So how many machine hours are going on A? How many machine hours are going on B? So like that, I mean X and Y. So depending upon, the type of input and output in each department, we will have to find out what is the reasonable scientific allocation base. So now your question is, sir, why are we using machine hours?
Yeah, yeah.
So the answer to that is, see, basically, very simple, because they are asking us to do that. So calculate machine hour rate.
Yeah, yeah. Sir, my question is, what is the logic of dividing the total overhead divided by the machine hours?
So the logic is in the last part. So when the department, a single department is, let's say catering to multiple products.
Yeah, yeah, yeah.
So you cannot divide it by the number of units. So you will have to find out how much machine time is going on each of the product.
Yeah, yeah, yeah.
So that is
Then,
the, logical reason why we will be using the machine hour.
sir, then based upon the number of hours used by each products, then we can allocate, no?
Correct. So then in department A, if they say three products are there, product X, Y, and Z, product X is using, 10,000 hours, product Y, 20,000 hours, and product maybe some 15,000 hours, we will calculate that proportion.
Yeah, yeah, yeah. Yeah, sir.
So
Okay.
it is machine hour rates, it can be labor hour rates also, it can be anything else also. As
Yeah.
long as it is scientific and reasonable, there is absolutely no problem.
Yeah, sir.
Any other doubts that you're having in this relation, or maybe in these chapters?
Sir, overhead, I have one more doubt also.
Please.
If friends has any doubt, if they want to ask, they can go ahead and later I can ask.
So probably you can go ahead and ask what's your doubt in overhead, since it's a very related.
Yeah, yeah. Sir, with the illustration to 4, no? Sir, you can take that illustration to 4.
Okay.
Sir, in that solution.
So it's a manufacturing company having departments A, B, C, X, Y. They have given direct material, direct wages, and they have given us the overheads, factory rent, power, depreciation, overheads.
Distribute that overhead. Sir, sir, my doubt is with respect to that solution table, no?
Okay. So
Like,
let me just quickly go through the question for the benefit of the other students also.
yeah.
We have the factory rent, power, depreciation, other overheads. Additional information, they have given us area and SFT, value of the assets. All right. The number of machine hours that we have taken in each of the department, the horsepower of the machines. All right. But assessment of the apportionment of expenses of service department is under. So service department X, A, B, C, and Y. They service department Y, A, B, and X in that proportion 60, 35, and 5. All right. Required bit 1, prepare a statement showing distribution of overheads to various departments. So basically, statement 1 that is there, we have to do the allocation and apportionment.
Yeah, then we need to.
Then in the statement 2, they are asking prepare a statement showing redistribution. So basically, we are talking about reapportionment of the service department expenses to the production departments using trial and error method.
Yeah, yeah. Yeah, sir, in the solution part, they had given direct material, no? Yeah, in the direct material, under the departments A, B, and C, we have put dashes. For in the X and Y department, you have we wrote the direct material and direct wages, no?
Correct.
Sir, why? And if sir, if that is due to the logic of like for A, B, and C, direct material and direct wages is not an overhead, but for X and Y, it is a direct costs, no? Then why are we showing under the overhead distribution summary?
So if I'm understanding your doubt correctly, your doubt is, sir, why have we not taken the direct material for A, B, and C?
Yeah.
All right. See, here we are only preparing the overhead distribution summary. Again, you have to go to the grassroots level. What is overhead?
Yeah, overhead is indirect expense, indirect labor, indirect material.
So indirect with respect to what?
With the production department, no?
Indirect with respect to a particular unit.
Yeah.
So, see, what is direct and what is indirect is a relative concept. So, maybe some material that you're using is not directly attributable to one unit of manufacture, but the same material can be directly attributable to the department which are making 100 units of same product.
Yeah.
So here in the context of overhead distribution summary, this direct material, so when we say direct material, we are saying direct in relation to the entire department X.
Yeah.
So per se, these are all overheads only, attributable to one unit, directly attributable to that department. And since it is directly attributable to a particular department, we are doing step one, which is the allocation. So direct material we are allocating to X and Y. And to be more, specific and clear, X and Y, all right, they are not producing any output. From which we are going to, recover the cost by selling. So
Yeah.
this cost ultimately will go to departments A, B, and C.
Yeah.
From A, B, and C, we will calculate overhead absorption recovery rate, and then it will go to the individual products.
Yeah, sir. For the department X and Y, these direct material and direct wages are direct costs, right? It's not an overhead, right? Then why the overhead distribution summary?
Precisely. So it is indirect in relation to one unit, but direct in relation to the department. So when we are preparing the summary of that department, we are calculating, okay, this department has a total cost of 4,75,000. This 4,75,000 based on the allocation is incurred in the department. Now I will transfer this to the production departments. Production departments, we will take it to the product based on overhead. So broad level, this is an overhead only.
Yeah. For the production department, this is an overhead only, no?
It is an overhead only.
Okay. So, sir, since we are calculating the the overhead which has to be distributed to this production department, that's why we are showing this direct material, direct wages under this table, right?
Correct.
Okay, sir.
So, there was a similar doubt which was raised from CMA topic. So, Nisam, I think that doubt was yours only?
Yeah. It was mine only.
Okay, the same question? Similar question?
Yeah, same question only.
All right. So, Nisam had sent in some doubts. If any other students are having doubts, probably, we can address them if it is feasible. And if it is not elaborate, and then we can go to the quick revision. Rather, let's do one thing. I'll first go through the quick revision and then we can go, come back to the doubts. So basically, first chapter, Introduction to Cost and Management Accounting. See, this per se, students, is a topic where, we will have few theory questions. But then also what is important in this topic is the understanding that we should have in relation to the classification of costs. So, basically we go through the definitions of what is cost. Cost is any amount of expenditure. Costing is the technique of cost, and accounting. All the cost is your cost accounting. So these are some basic fundamental, concepts are there. Now, what are the objects of cost accounting? Objectives. When we talk about objectives, one, determining the cost, ascertaining why are we incurring the cost. Okay, having determined, we need to account and we need to find out, what should be the selling price. So it is going to help us in selling price fixation and determining profitability. Then we have the concept of cost control, ensuring that we incur the cost as per the plan and we do not incur anything more. So that is going to be called as cost control. Trying to permanently reduce the cost is going to be cost reduction. What is the difference between cost control and cost reduction? It's a very important question which keeps coming in your exam time and again as a theory topic. So in cost control, we are just trying to ensure that it is as per standard. So we will identify a standard, we will determine a standard, we will measure our actual performance, we will do the comparison. What is the standard versus actual? What is the budget versus actual? We will analyze and take corrective action so that next month, next quarter, next week, next period, we have our cost in control. But in cost reduction, we talk about reducing permanently the cost. All right. And then finally, the objective of cost accounting is assisting the management in decision making. One thing that you need to remember when we talk about cost reduction is that there are three main assumptions. There has to be a saving in unit cost. The reduction has to be of a permanent nature. And we are not talking about using a substandard product. We are talking about maintaining the utility and quality. The utility and quality shall remain unaffected, if not improved. So we are not talking about reducing the cost at the cost of quality. All right. So you have to go through this. Cost control is more of a preventive. How do we prevent from spending more? Cost reduction is permanent. It's a corrective action. Then what is also important in this chapter is the classification of cost, which I will run through very quickly. All right. So classification of cost. See, we are going to classify cost on the basis of the nature or element. So we will say whether it is directly attributable or indirectly attributable, whether it is material, labor, or other expenses. So we have direct material, direct labor, direct expenses, indirect material, indirect labor, indirect expenses, and these indirect items are going to be called as overheads. So that is one way of classification. Then we also classify it as by function. So material cost, labor cost, expense cost, prime cost, factory overhead, admin overhead, selling overhead. So for the purpose for which it is incurred, we are going to classify maybe R&D cost, distribution cost. So that is by the function. Then we have by variability or behavior. I feel this is the most important classification that one should understand, and this is going to help us in understanding the concepts of marginal costing also. So cost classification by variability or behavior. Fixed cost, cost which is going to remain fixed irrespective of the level of activity, whether you increase the production or decrease the production. The cost in totality is going to remain constant. We are not talking about per unit, we are talking about totality. But variable cost, it is going to increase with the level of activity, decrease with the level of activity. However, the per unit cost is going to remain constant. And then the third type that we have is going to be semi-variable. It has a fixed component also, it has a variable component also. Whenever semi-variable costs are given, we will have to first segregate into what is the fixed component, what is the variable component. Maybe we can use the highest lowest method, the variable method, or the simultaneous equation method in order to segregate what is the fixed component, what is the variable component. Then we have costs which are controllable or uncontrollable. Now in the last few months, dollar prices have been increasing. If I am into production of some item which is dependent upon imports, can I control as an entity the rate at which I'm importing, the dollar rate? I have no control over the forex. So those are uncontrollable costs. So we'll have to identify what is controllable, what is uncontrollable, what is normal, what is abnormal. Normal is going to be added to the cost of the product. Abnormal is always going to get debited to the costing P&L. Then we have cost for managerial decision making. So some, concepts: predetermined cost, determined in advance; standard cost as per the budgets; marginal cost, the cost for one additional unit; opportunity cost. If you are doing CA, you are not going and working somewhere, your salary becomes your opportunity cost. So like that, we have some, theory topics of what these costs are.
Sir, can I ask you
Yeah,
about
please.
what is the
Sure.
relevance of opportunity cost?
Sorry.
Sir, what is the relevance of this opportunity cost with
See,
respect?
opportunity cost. So it has relevance in decision making. Let's say I have purchased a Cadbury chocolate by
Yeah,
paying 8 rupees for a product which has a MRP of 10. All right. A customer comes to your shop and says, look, I want to buy this Cadbury, but I will pay 6 only. Will you
yeah.
sell?
No, no,
No.
no.
I tell you, today is the expiry day of this chocolate. If you are not able to sell today, tomorrow its worth will be 0. Now, will you sell for 6 rupees?
Yes, yes.
So, what is opportunity? Again, it is a contextual. So, if you are foregoing something to take up something else, then opportunity comes in. Certain implied cost comes in. So, these are more in relation to decision making, which you will be learning in detail much more in your decision making at final level.
Yeah, yeah.
Okay.
Okay.
So these are the important, concepts that we need to understand. So in chapter 1, when we come to chapter 2,
Sir, how do we connect, interconnect all these chapters so that at least we remember, no?
see, as far as connecting is concerned, the first chapter is giving you why we are, learning this subject costing. So what are the objectives? The objective is clearly ascertainment of cost. When you talk about ascertaining the cost, it is saying there are several types of costs that we are incurring:
Yeah,
material, labor, direct expenses, and then overheads. So see, logically, chapters 1, 2, and 3 are only the elements of cost. Then
yeah,
move forward towards chapter 6 and 7, you learn cost sheet. So having learned how to compute material cost, how to compute labor cost, how to arrive at the overheads, then ultimately you have to put everything together and prepare something as a called as a cost sheet. So naturally, these topics are interconnected to each other. Now,
yeah.
learned how to prepare a cost sheet in chapter 7,
Shit.
in
Sir,
chapter number 7 or 8, these, then we will have to enhance our understanding. Okay, if there is a service industry, how we are going to calculate? If there is a industry which goes through processes, process 1, process 2, process 3, how these cost sheets will be prepared? How
yeah,
the concepts will change? If there is a particular entity which does production in batches, then what do we do? If there is someone in construction, then how the cost sheet has to be amended. So these are logically interconnected if you look at it in a way.
yes, sir. In the exam, there are sometimes we'll get new adjustments and all, no? So, sir, how do we tackle them? And sir, what do actually we need to do from now onwards to, get all, not to tackle all those questions?
Uh, I mean, let's do one thing. Let me first quickly run through the revision part, and
Yeah,
then
yeah.
at the end we can have a quick question, because it is in a way
Okay,
interrupting the entire run through and
okay, sir. Fine, fine.
yeah. So we will address your doubts, but maybe just park it till the end.
Oh, okay, okay, sir.
When we come to the next chapter, material cost, in this chapter, basically we are talking about three things. One is valuing the material receipts. So when we buy the material, at what value are we going to record that? So when we go to the market and purchase, so we are going to pay, the basic purchase cost. We are going to pay freight. We are going to pay duties and taxes, GST. Sometimes we'll have to pay demurrage charges, penalty, etc. So the first part of this chapter is dealing with the receipts of material. What it is also doing is it is introducing us to, some theory concepts. So if an organization has to actually buy the material, then what is the standard operating procedure that the entity will, follow? The production team will have to give a indent to the store. The store will have to, check whether they are having sufficient material with them or not. If they are having, they are going to issue the material, and something called as material issue note, material receipt note, etc. will be prepared. But if the store is also not having material available with them, they are going to raise a purchase order on the vendor. When we raise a purchase order on the vendor, we are going to call for quotations, we are going to do our tendering process, we are going to, carry out various basic checks. And then after we finalize the vendor, we will issue a PO. We will receive material against the PO. So when we receive, we will prepare something called as goods received note. Then, it comes into the stores. From the stores, it goes to the production floor. From the production floor, it comes back, to the store. Sometimes when there are returns, sometimes the returns may also be going back to the vendor. So that theory as to how the process flow works is given. Apart from that theory, the valuation of material. So how we are going to do the valuation of incoming material, that is one thing that is spoken about. Second is when the store is issuing material to the production. So how are we going to value the issues? Are we going to value based on FIFO? Are we going to value based on FIFO? Or are we going to use weighted average or some other method? So this chapter talks about that. And then it is also talking about how much material should we keep in stock. So when should we place an order? For what quantity should we place an order? What should be the minimum stock we should keep? What should be the maximum stock that we should have? So broadly, these three concepts are dealt with in this chapter. So when we talk about valuation of material receipts, so this particular table is going to be important for us. So ascertainment of cost of material purchased is called as valuation of material of receipts. So trade discount, don't include it in the cost of our, we deduct it from the cost of our purchase. Quantity discount, we deduct it. What do we do with cash discount? Do we deduct it from the cost of the purchase? The answer is no, because it is not directly in relation to your purchase. It is of a financial nature. So cash discounts are not deducted. Any subsidy, grant, etc. that we receive from the government, it is deducted from the cost of the purchase. Duties and taxes. See, the broad thumb rule is anything that we are going to pay, if we can take input credit of that, or if we are going to get refund of that from the government, we don't include. But if we are not going to get any input credit, or we are not going to get any refund, then that duty and tax, whether it is road tax or GST, etc., it has to be included in the cost of the product. So it depends on whether it will be refunded or it will not be refunded. Penalty and charges. Thumb rule, any penalty, any charges, it is an abnormal item. The moment it is abnormal, it should go to the costing P&L account. It should not get added to the cost of the product. So this normal, abnormal, whether it is material, labor, overhead, this concept is going to remain the same. Any abnormal item is debited directly to the costing P&L. Don't include in the cost of the product. And then insurance, we add. Any commission or brokerage, if you are paying to buy the material, we add. Freight inwards, we add. Cost of the container. Again, it depends on whether it is returnable or non-returnable. If it is non-returnable container, we add. If it is returnable, we will not add. Further, if it is returnable, but some cost we have to incur. Let's say while buying, we have to pay 100, but when we return, we are going to get back only 80. So that 20 rupees, which is not going to get refunded completely, only the shortfall is to be added to the cost of the purchase. Now, last important thing is shortage. Sir, we purchased 1 ton sugarcane from the factory, but by the time it came to our warehouse, by the time it came to our factory, it was no longer 1 ton. There was evaporation. There was some natural weight loss. So what came to us was maybe only 0.9 of a ton. So in that case, what should we do? See, if the shortage is due to normal reasons, the good unit should absorb. If the shortage is due to abnormal reasons, it has to go to the costing P&L. So that shortage, we will have to identify why it is there. So this is as far as the receipt of material is concerned. Then when we talk about the issue of material, basically we are going to issue it at cost. So let me just quickly come there. Correct. Valuation of material issues. So when we issue, there will be cost price methods. So either we do it at a specific price, at whatever price. If it came at 100 rupees, we are going to issue at 100 rupees. So if there is some specific purchases, that is when we use this method. Or the most popularly used method, FIFO. Whatever came in first, we are going to issue first. The next method is LIFO. Whatever came last, we are going to issue first. So these are the cost methods. Then you have average methods. In average methods, you can use a simple average, or you can use a simple average method. So you don't multiply it with the number of units that were purchased. If first lot was at 10, second lot was at 12, third lot at 12, fourth lot at 15, fifth at 11, you will simply take the prices, divide by 5 lots and arrive at the simple average. On the other hand, the next method will be weighted. So in weighted average, what you'll do, you'll say 200 units at 10, you will multiply, plus 150 into 12. So on, you will go on, you will assign weights and then calculate weighted average. You'll use the weighted average rate for the issue. So you have simple average, you have weighted average. And then you have the market price method. So it's more like, a theory topic. There are no practical questions which are there on this. Replacement price method. If I go and buy in the market today, if I want to replace my product, at what cost can I replace? Let me issue the material at that price. Or realizable. If I go and sell my product in the market today, what amount I am going to realize? Let me value the issue at that price. So it will be basically replacement price method and realizable price method.
So replace means we are selling and purchasing?
No, see, basically today I am into, let's say, car manufacturing. One of the major inputs for car manufacturing is steel. All right.
Yeah.
Steel I had purchased at 40,000 rupees per ton. Because of COVID and because of international prices rising and because of inflation, now the price of steel has become, let's say, 65,000 per ton.
Yeah.
All right. So if I am having sufficient quantity in stock and if I was using FIFO method, even though today the price is 65,000, if I have inventory of items which are purchased at 40,000, I will say today's issue is going at 40,000 from store to the production. But the replacement method, what it says is, you forget your FIFO, you forget your book. Today, if you have to go and buy that material, at what price you can buy? So basically, we are talking about using from the store and replacing it. So today, if you go and buy the raw material, you are going to get it at 65. So even though you have bought it at 40,
Get
that. Today, if you go to the market and buy that, if you replace your inventory, if you replace your stock, because you're using it for production. So that.
Yes, sir. That realizing means selling and replacing means buying, right?
Realizing means selling, replacement is buying. Absolutely.
Yes, correct.
Yeah. So see, realizable, when do we use? So if there is some material lying with us, it is a non-moving item. We are not using regularly in the production process.
Yeah.
If there is a new opportunity which comes in, probably which requires this non-moving material, so I will consider, okay, if I don't use it for this, I can today go and sell. So how can I realize? That becomes more like your opportunity cost. So realizable cost is nothing but the opportunity cost in a way. So then you have your notional price methods, issue only at the standard price, issue at the inflated price, issue at the reuse price. All right. So valuation of receipts, valuation of issues. And then you have your inventory control, where we talk about, all your reorder levels, reorder quantity, etc. So when we talk about reorder stock level, when should we order? Reorder quantity, how much should we order? What maximum stock we can keep? What is the minimum stock we should keep? What is the average, which is nothing but maximum plus minimum by 2 that we always have? What is the danger stock level? Below this, we will not be able to meet even our emergency requirement. How much buffer stock we need to keep? So, these concepts are discussed. E is, basically 2AO by C, under root 2AO by C, where we have the annual consumption represented by A. O is the ordering cost per order, C is the carrying cost. Now, this EOQ is also used in your batch manufacturing topic, where we have economic batch quantity. Both the concepts are exactly similar. So you have these, levels. Reorder stock level. We should order so much to cover, normal, abnormal consumption situation. So we have these formulas: maximum consumption into maximum reorder period. Or we can say minimum stock level what we should maintain plus the average consumption into average period. Reorder quantity is the EOQ, as we were discussing by C.
Sir, I have one confusion with respect to the maximum stock level.
Yes, please.
Sir, in the maximum stock level, that is reorder stock level plus reorder quantity minus the minimum consumption into minimum reorder period. No,
Yeah.
For my confusion is why it is minimum consumption into minimum reorder. Why not maximum consumption into maximum reorder period?
See, generally, the maximum stock, what we are saying is reorder level. See, when we reach the reorder level, that means we are going to have certain number of units at the reorder level. We are going to place a fresh order. All right.
Yes.
The fresh order that we place will be for the reorder quantity, which is our EOQ.
Yeah.
So at the reorder level, when I place an order, I will place an order equal to the reorder quantity. All right.
Yes.
But it is going to take time for it to come.
Yes.
All right. So if I use the least number of units for the least number of period of time, so this is what will get consumed by the time I get the reorder quantity. So once I place the order for the reorder quantity, it will take some lead time, right? If I place today, I may not get today. I may get maybe 4 to 10 days.
Yes.
So we are saying, what is the least amount of consumption that you will do?
Yeah.
If you take the maximum, that means you're giving them maximum benefit, and your minus figure will be greater. If your minus figure is greater, that means it is not really maximum. If you stock earliest and in the least amount of time.
Yeah, sir, that's a logical point. If you subtract less amount,
you subtract less amount basically.
Yeah. So we'll get the maximum stock level, right?
Yeah. So this is the least consumption. That is how you get the maximum stock.
Yeah.
Makes sense? All right. Then average inventory is, two ways of doing it. Either maximum plus minimum by 2 or minimum plus half of reorder quantity. So these are basically, the important concepts in topic 2. Then coming to chapter 3, there basically one single snapshot will help us in understanding what this topic is actually going to cover. Let me come there directly. So see, wages we are going to pay to the workers who are directly, involved. Now, on what basis are we going to pay? So one, we need the employee details, which is going to come from the personnel or the HR department. At what, wage we have hired someone. So what is their wages? That is going to come from the HR department. And then there is something called as the timekeeping department, who is going to keep the attendance, who is going to keep detail of how much work or how many days a particular person has come. If we multiply them, we will understand how much salary for the month or how much wage for the period we need to pay. So something called as wage sheet or salary sheet will be prepared. Then once this sheet is prepared, it is going to go to the accounting department, who will take care of statutory deductions like ESI, PF, PT, some loan reimbursements, or if they had taken some advances, adjustment of that. So those deductions and contributions will be taken care by the costing and accounting department. Whatever has to go after deductions to the employees will be paid to the employees. What has to get deposited with the statutory bodies will get deposited. So here you will have, theory about how timekeeping is to be done, how this pay sheet is to be prepared, what kind of pro formas are, going to be kept. But end of the day, what is the objective that we have to achieve is, we need to understand how the wage, how the employee cost is going to be computed. The simple thumb rule here is whatever payment we are going to make to an employee, whether it is in the form of basic wages, dearness allowance, special allowance, bonus, or employer's share to PF, ESI, etc. So whatever contributions we are going to pay, whatever monetary expenditure in money terms we are going to incur, all that is going to become part of our cost. Apart from this, there can be some non-monetary items also. So student, has pointed out that there is a specific topic 3.9, which has not been dealt with. So let me go there quickly. Sir, we have not dealt with absorption of wages. So see, the concept is very simple. It's the same. Wages represents monetary payment. Anything that we are going to pay to the workers directly, that is going to be part of our wage cost. And non-monetary payments, maybe, will get treated as overheads and will go to the overhead accounting. And monetary part includes all your basic DA, overtime wages, special allowance, etc. If any bonus is paid, any ESI is paid, any employer's contribution of PF is paid, all of that is going to get included. So here, when we talk about payments to employees, there are basically two plans: the HALSI plan and the Rowan plan. So these are two ways of making payment. So normally we can have time-based payment. So the number of hours that they have worked into the rate. We can have piece rate system. The number of units they have produced into the rate. But then there are these bonus plans which say, okay, we are going to pay them for the time, but we are also going to pay them for the benefit, the time saved. So the HALSI plan is called as the HALSI 50% plan, wherein apart from the time taken into time rate, we give them 50% of the time saved into their basic wage rate as bonus. So basic wages plus the bonus. When we come to the Rowan system, it says, okay, the time taken into rate, this basic we are going to give, but the bonus will be calculated in this manner. It will be time saved by time allowed into time taken into rate per hour. So basically the extent of efficiency that we are going to factor in some way, and then we are going to make the payment. So your questions will basically be based on Rowan plan and the HALSI plan. So any other specific doubts in relation to this topic? All right. Then apart from the wage cost, we have few questions which keep coming based on the turnover. So employee turnover, it can be calculated basically using three methods: the replacement method, the separation method, and the flux method. Now, what is employee turnover? See, employees will join your organization, they will leave your organization. So you'll have people coming in, people going out. So when we take the number of employees replaced meaning left and new came. So number of employees replaced during the period by the average number of employees into 100. It is called the replacement method of calculating employee turnover. When we take the separation method, so we are not talking about people going out and coming in. We are talking only about people going out. So the number of employees separated by the average number of employees into 100, it gives us the separation method. And flux, we take both. It is a combination of replacement and separation. So number of employees separated plus replaced divided by average into 100. So that's the flux method. So these are important, basic, very simple and straightforward, but important calculations from the examination point of view. You get simple, easy 5-mark questions on this topic. Then the last chapter, is your overheads. which in a way, we have discussed while addressing doubts of one of the students. And I will again quickly go back to that particular illustration only, that particular description. So in this entire overhead chapter, what we are going to do is we are going to deal with indirect material, indirect expenses, indirect labor. Whatever is not direct, it forms part of our overhead. Then we try to understand from a department perspective. If something goes directly to a particular department, we do the allocation. If something is not directly related to a particular department, but it is for all the departments, we do the apportionment of such cost. And then the non-production departments, whatever service departments we have, that we are going to transfer back to the production departments. That is called as reapportionment. So we have allocation, apportionment, reapportionment. And once we do that, we are going to get the total overheads. The total overheads then will be distributed to each unit or each product based on something called as the fixed overhead absorption recovery rate. Now, while we do all of this, the allocation, apportionment, reapportionment should be on some scientific, reasonable basis, which generally for the purpose of our examination will be given in the question. So they are going to indicate how it has to be done. And then as far as reapportionment is concerned, there are, couple of methods that they have given: simultaneous equation, continuous distribution, step distribution, reciprocal distribution. So those methods has to be, understood, and you will have to keep in mind while preparing for your examination. So let me just see if there is a good summary. All right. See, when we talk about distribution, we have the direct redistribution method. Under this method, what we do is we directly distribute the service department cost to the production departments. We don't redistribute anything to other service departments. Let's say there are service departments 1 and 2. There can be a possibility where department 2 is using services of 1 and 1 is using of 2. But under the direct redistribution, we don't distribute anything to the service department. We take it directly to the production departments only. But under the reciprocal method, all right, under the reciprocal method, we redistribute between the service departments also using either the simultaneous equation, repeated distribution, or the trial and error method. Yeah, so any specific doubts if students are having, they can probably, ask. If the doubts are simple, straightforward, we can address them. If they are lengthy, then probably we'll take a note of that, and in the next session, we can address them.
Hello, sir.
Yes.
Yeah, sir, I have asked a question before, right?
Please.
Sir, which is those chapters in costing which are in the exam, they test direct adjustments and all, not much complicated. Sir, which all chapters are there like that?
See, when you take individual chapters, questions are pretty direct. So in costing, except for your standard costing, marginal costing, I don't see any interplay or interconnection where they are going to ask you questions. So if a question is on process costing, it will be a pure process costing only. You will not have question which will have elements of material, labor, and overheads also in that. If they are asking maybe wage computation, it will be a simple, straightforward wage computation under Halsey and Rowan.
Yes, sir. Sir, what should we do in advance, in order to prepare or to tackle the new adjustment which is going to come in the exam?
Correct. See, if I am a student and if I was giving the exam, what I would do is when I read the question paper in the first 15 minutes, I will try to identify which are the straightforward questions. And my attempt will always be to answer those questions first, at least give 2 hours, 2.5 hours or 2 hours, 45 minutes to the questions which are straightforward. Because, having seen so many papers, I know at best there will be 1 or 2 questions where there might be some tricky, part involved. My attempt will always be to ignore or avoid attempting those questions at the beginning of the exam. I will
Yeah.
first solve what I know. It can be in any order. The institute does not say that you have to first answer difficult questions only. You first answer what you know, simple, direct, straightforward. Towards the end, if you have sufficient time left, then based on reasonable, logic and reasoning, try to go stepwise. So the question, if it is big, it will have multiple workings involved. So do small workings. Each
Yeah.
is going to carry out the mark. So let's not try to jump into arriving at the final answer. Maybe in that question, there will be 10 adjustments, and one adjustment is a trick adjustment. We don't know that.
Yeah.
So don't worry about that adjustment. Prepare working notes for other 9 adjustments.
Yeah.
So, if it is a cost sheet, don't attempt the cost sheet directly. Start writing working notes for the other points.
Yeah.
You will score 60-70% of the marks even for the question where you don't know that trick adjustment. And the last option that you have when you don't know the trick is make an assumption. Write what you're assuming. And if you are in doubt that it can be dealt in some other way also, give that second assumption also. Say if this has to be assumed, then probably this treatment can be given. So
Yeah.
if you have two minds, you
Yeah.
can always do that. But for
Yeah.
this, I recommend that you should do it only towards the end when you have time and when it is not going to affect the rest of the paper.
Yeah. Sir, should we do the study material question then along with from where we have to do the question, sir?
See, study material RTPs,
Yeah.
previous 3-4 exam questions are a given. You at any cost cannot avoid them. So
Yeah.
should be definitely your Bible.
Yeah. Sir, last, can you name some of the chapters, where they frequently ask the theory questions?
Frequent theory questions are going to come from chapter 1,
Yeah.
which is your introduction. It is going to come from, maybe employee cost,
Yeah.
and it is going to come from your budget and budgetary control.
Yeah.
So these topics I frequently see where, they prefer asking theory questions. But having said that, other topics are also equally important.
Sir, thank you, sir. Thank you, sir, for clearing this doubts and all.
Or if you want me to throw light on some specific topic, please let me. I will make a note of that. So
I don't think there's any specific queries that have come up. So I think we can wind up this session. So students, thanks a lot for attending this session. And Pranay, thanks a lot for conducting this session on Sunday morning. We have few more sessions coming up. So the next session most likely will be on Jan 22nd, where we'll be covering chapters 5 to 8, if I'm not wrong. And we'll first finish the doubts, and then we will, have a quick revision. And if doubts can be sent in advance, it will be easy for the faculty to respond faster without wasting any time. Fair enough. So thanks a lot, everyone. Thanks a lot for attending. Thanks a lot, Pranay. We'll close the session.
thank you, friends.
Bye.